Hello, and welcome to episode 5 of
Mo Money,
the investing show for millennials by a millennial. Now today we're going to be talking about something very exciting. Now, you've put in the time over the past 4 weeks, and the anticipation has slowly been building. And you're begging me to give you the signal. And it's time to get you wet by dipping your toes in the water, because we're going to be talking about picking stocks. You've opened up your account. You've put aside some money. You're mentally prepared for the ups and the downs of investing. Now comes the big moment. I think that you're ready to be sent out there to buy your first couple stocks, or even just buy your first stock. But before I send you out there, I need to tell you exactly what it is that you're looking for when you're buying stocks. So this is how we're going to do it. I ran up there to Mount Sinai and I received this.
1, 2, 3, 4, 5, 6, 7, 8, 9.
The 10 stock commandments. 10 stock commandments. Been in the game a few years, it made me an animal. Rules to the shit though, I made y'all a manual, a holy book to follow, here to bless you like a sneeze, to help your cheese increase with ease. Commandment number 1, like it or love it. If you use the company, go get a piece of it.
Yes, commandment number 1. Best way to investing in things that you know, things that you like. That way you're more comfortable with the investment. You like your iPhone? Great. Your iPad? Great. Buy Apple stock. You're wearing Uggs, yoga pants, and you
just can't even.
Buy Starbucks. You're a sneakerhead. Great. Buy Nike. You think you look sexy in Victoria's Secret. Buy L Brands. If you like it, if you use it, if you love it, then why don't you buy a piece of it?
Number 2, if it makes sense and makes sense, then buy that fucking stock. No need for hesitance.
If you have an interest or a knowledge of something, whether it's clothes, fashion, medicine, buy stocks that you know. You'll know the best companies to buy when they're doing well, and if they're not doing well, then you'll know to sell the stock. Do you know anything about shale or fracking or other oil words? Me either. Do you know anything about cancer medications or therapy treatments? Me either. Don't go chasing waterfalls. Just stick to the rivers and the lakes that you're used to.
Was that accidental, or were you trying to quote TLC on purpose?
Number 3, always respect the boss. Is he leading them to profits or leading them to a loss?
Respect the boss. There's some great men in history who ran some truly impressive companies. Rockefeller, Carnegie, Steve Jobs, JP Morgan, Warren Buffett, Henry Ford. There are a lot of CEOs out there that really fucking suck. Carl Icahn will tell you that himself. He has fired a lot of them in his time as an activist investor. But there are some great CEOs out there that if you like them and you believe in their vision, invest in their company. Elon Musk, Zuckerberg, Bezos, John Legere, Tim Cook, all of them are amazing CEOs who have continued to show their immense competence in running a company. It doesn't matter if it's rowboats or a goddamn aircraft carrier. You need a good captain to steer that thing in the right direction.
Number 4, are they slowing or are they growing? If they ain't progressing, dump that shit and get going.
When you're picking a stock, ask yourself, does this company have any growth potential? Are you investing in a stock of a company that manufactures typewriters and pagers? If so, that's probably not the best stock for you to be investing in. Okay, it's important to buy a stock that continues to innovate in new ways, whether it's new products or new ways to monetize themselves. In Wall Street, it's not about what you've done that makes people buy the stocks, but what will you do for me in the future that makes me want to buy you now? Is this company going to continue to grow and flourish, or are they on the decline?
Number 5, for the 100th time, diversify across a few sectors to keep that portfolio alive.
Okay, I've said this before. I'll probably say this a million times in the future. That's because it's important. In investing, if something goes wrong with one company, it can affect every other company in that sector. So it is important to be diversified across many sectors. Own a tech stock, own an industrial, own a retail, own a consumer discretionary. You should always be buying the best of breed in those sectors. Don't know the best company to buy, or you don't understand the sector? Buy an ETF. An ETF allows you to capture either a certain index like the S&P or a certain sector like oil sector, tech sector, higher energy sector, or the entire consumer discretionary sector. And they capture the performance of that entire sector in one ETF, which trades exactly like a stock does, which allows you to diversify without having to buy just one company.
Number 6 is this: never go to war without a plan, or you'll be standing around with your dick in your hand.
Okay, the great Napoleon, and he was great. I mean, he conquered pretty much all of Europe. He spread democracy across Europe. He ended the revolution in France. Anyways, he said this: take time to deliberate. When it comes time for action, stop thinking and go. Another great Napoleon Hill, said, all achievements, all earned riches have their beginning in an idea. To make money, you need to do your homework beforehand. Look at a company. Know why you're buying it. Is it the fundamentals? Is there some story, a new product? Have an exit strategy. Say, okay, if any of the original reason why I bought this stock has happened or has changed, then exit the stock. If you enter a war with no plan, you will surely be defeated.
Number 7, ask where the fucking cash at. If it ain't there, keep moving right past that.
There is no reason to invest in a company that is not making money. Okay, there are a few things you'll want to look at in a company's fundamentals, its financials, that will tell you if it's a good choice or not. Okay, there's the top line, which refers to revenue and gross sales of the company. Okay, EPS, earnings per share, is one thing you'll hear a lot about. It uses net income of a company to show how effectively they are at making money. This is called the bottom line. You want to see those things constantly increasing to judge if a company is doing well. Also, you hear things like PE, price to earnings. Below 15 of that number is always very attractive. Debt, do they have a lot? Do they have the ability to pay it? Fundamentals is complex, and I'll do an episode about this very soon.
Number 8, margin, never borrow. If this shit goes wrong, then there's no tomorrow.
Consignment, only for live men, not for freshmen. Biggie was talking about buying cocaine on credit, but the same reigns true with stocks. Do not buy stocks with borrowed money. This is called trading on margin. Okay? If you do this, you could end up losing a lot more money than your initial investment. There was this dumbass by the name of Joe Campbell who turned a $36,000 account into a negative $130,000 account in one day while short trading in a margin account thanks to this guy, Martin Shkreli. He bought a company by the name of Calabios. This guy was shorting it, hoping that the price would go down. The stock went from $250 to $18 in one day. Needless to say, he lost a lot of money. This is a very risky trading technique. I do not suggest it for just your normal investor. It's stupid, it's dangerous, do not do it.
Number 9, surely the truest words I ever spoke. Catching falling knives will leave you broke.
Catching falling knives is a phrase that you'll hear often in Wall Street and finance. When a stock drops 30 to 40%, it's easy for you to think, wow, this thing is on sale. But most likely, if a stock is down, it's for a reason. Okay, where there is smoke, there is fire. Do your homework. There is scandal. There's something going on. Are there fundamentals bad? The stock goes from 50 to 25, and you think buying it is a good idea, and it goes to 20, 14, 8, 5, and you try to catch that falling knife, most likely you will have bled a lot of blood. Do not catch falling knives. Wait for them to hit the ground.
Number 10, the dividends. If the company making ends, they surely have the money on their shareholders to spend.
You know how I'm always talking about compound interest, the concept of letting your money work for you? This is the perfect example. Dividends. Dividends are a portion of profits that companies will pay to their shareholders. Okay, usually established, large, profitable corporations pay dividends to their shareholders, such as Verizon, General Electric, Coca-Cola, BP, Waste Management, Icon Enterprises. They all pay anywhere from 1 to 6 to 10% dividend to their shareholders. Not bad, especially if you own a lot of the shares.
My friends, follow these rules and you'll have mad bread to break up. If not, you'll be broke as shit every day you wake up.
If you're looking to buy a stock and it doesn't meet a few or even a one of these commandments, that should be a huge red flag that you should not be buying it. I cannot guarantee that these following commandments will make you money, but I can tell you that you do follow these commandments, your chances of making money are easily much, much higher. You'll be a lot more confident than if you just picked at random, or you Googled good stocks to buy, or if you listen to some jackass friend of yours. I encourage you to go, do a little homework, buy a stock. It's about time. Now is a great time for young investors to start investing. So get your ass off of your assets and go out there and buy something. I appreciate everybody who tuned in. Remember, if you follow the commandments, you almost guarantee that you will definitely be able to make yourself some money. With that being said, I'd just like to thank everybody for continuing to watch. We'll be having another episode next Friday at 4 p.m. Stay tuned. Mo Money signing out.
No info for the DEA. Federal agents mad cause I'm flagrant. Tap myself and the phone in the basement. My team supreme, stay clean. Triple beam, miracle dream.